Ladies and gentlemen of the crypto space, we're live on a Monday, January 27th at 11:31 a.m. Today is an interesting day to bring home some very key points about capital, about what's commonly referred to in the crypto markets as TVL, and to further reinforce the concept of currency units, especially as compared to TVL. Okay, so with the narrative over the weekend, there was some very large liquidations as well as depreciation of the equity markets, specifically centered around AI. So the market cap of, let's say, NVIDIA goes down meaningfully, like $1 trillion, because people sold. Do you think that the amount of stocks sold gave people $1 trillion worth of dollars when they sold their shares? They sold them for dollars. Did the amount being sold equate to $1,000? No, be it the market cap comes down $1 trillion. Okay, so capital was extracted from the sale of equities, producing let's say $250 billion or whatever the hell was sold, decreasing TVL market cap of Nvidia $1 trillion. There's such a discrepancy there. This is why I come back to my key and core talking points about looking through the bullshit. So, what are the key inspections to make to look through the bullshit? PVL means nothing. The value associated with market state, available liquidity, it's it's something that makes it's an unnecessary inspection. If every share of Nvidia was sold, you can't extract that amount of capital. It's not that way the system works. So TVL is just maybe a snapshot of covered market activity and interest. In in upon inspection, it doesn't offer truly uh, truly a great deal of information regarding the state of a market. Other than is it inflated? And that's exactly what we're seeing today, the potential for something to deflate. So okay, so all in all, tremendous amount of capital was extracted from the sale of equities today. And as we're looking at on the screen, total crypto market cap doesn't look like a tremendous amount of capital was extracted. So Japan raised interest rates, you know, 0.25%. What does that mean? Aside from the AI narrative over the weekend, and that's specifically to do with what I've been talking about, interest rate spreads. What does that mean? And how does this fold together with the AI narrative over the weekend, which nothing has changed whatsoever? If you borrow at, let's say, uh, 1% in Japan, and then you borrow $1,000, or let's say you borrow a bigger number. Let's say you borrow $100,000 and you're lending it to the United States at 5%. You make $5,000 a year, and clearly these numbers make much more sense if you're borrowing $1 billion or whatever, $100 billion, or the total carry trade, which is probably in the trillions. So that 5%, and all of a sudden, Japan increases interest rates 25%, which obviously is triggering a you can't now it costs more to borrow the $100,000. You have to either it's a variable interest rate debt position, you have to pay back more interest, yen denominated, which means look at the USD JPY. The yen has gotten a little bit more expensive as a result of the narrowing of the interest rate spreads, which means that 5 grand borrowed 100, lending it to the US for 5%, make 5 grand a year. Now you have to have instead of paying back the 1% interest, now you have to pay back, let's say 1.5%. You got to pay back more. And to top it all off, you have to pay it back in yen, which means if the yen is more expensive, that's eating into your 5 grand in profits. It's called the carry trade. So as interest rates the spread between nations narrow, it eats into profits, which encourages one deleveraging, exiting of carry trade positions, um, not complete unwinding. That's dependent on a market actor sensitivity and are they front running the market? Do they expect interest rate spreads to narrow further? Are they near not profitable, depending on endless conditions? So they don't want it to be a losing trade. They want to come out with some profit. And it's the same thing like owning a stock. If you expect it to come down, you're going to exit. Same thing with crypto. So if you expect the unwinding of a trade, a carry trade, to be decreasingly profitable into the future as interest rate spreads narrow, the margins, the, the few who act early start to unwind because they want to lock in their gains. But what does that cause? That causes continued unwinding and potentially further narrowing of interest rate spreads. So how does this tie back into AI narrative over the weekend? You can have the most bullish narrative in the world. AI is going to replace 100 million workers. It's going to be a technological deflationary event. The cost of goods and services is going to collapse to near zero. I'm just being hyperbolic, of course, or am I? So the market has come a long way. I'm talking about equities markets in a short period of time. It's relatively inflated. How do we know? Just look at NASDAQ on a 6 month chart, just up continuously. Okay, so this is just a standard psychological phenomena. What do I mean? The market doesn't need a reason to dump. It could dump at any time. If you give the market a reason to dump, things roll over. And unless we see policy changes or intervention, things continue to roll over. And that is what you see here for the dip 2022, for the 6 month wick in 2020, because it was just a blip on the radar. It was just a wick all of 2020. And obviously 2008 and .com. Those were a little bit more than dips. Those affected the structure of markets for a period of time. So I guess that's the phenomena of a rolling top and collapse of breath, as they call it, where shit stops going up. And if it stops going up, 5% per year, 4% per year, 3% per year, 2%. Oh, people start to freak out. Is it going to stop going up as much? And that's when people start to exit and rotate their capital to increasingly opportunistic positions. So right now, the equities markets are concentrated to a degree that makes them look like shit. It's gross because if you look at something like Russell 2000, we're still not above 2021 highs. So it's been 4 years and it's not at an all time high. So people who bought in 2021 are sitting on jack shit profits. So basically, if you look at the broad stock market as a whole, you just have a concentration of capital into few instruments. What does that mean? That's complete malinvestment. There's excess capital. It's being thrown at money markets. It's being thrown at Mag 7, and it's not getting allocated to where investments are needed. And historically and conceptually, where are investments needed? For productivity, for enterprise that actually does some shit, is meaningful, productive, produces revenue, employs people, produces goods and services that people consume, stuff that contributes to an actual functional society. So we're in a state where the world is, has been for a long time, experiencing what is unequivocally gross misallocation of capital. Basically, the 2 cents there is that contributes to the fact that shit could roll over at any time, and all you have to do is give the market a reason. And that is what I refer to as everything could fall apart, always. So that's the backdrop. And that's what I say almost every stream. Whole system is ready to collapse at any given second of any, because it's all bullshit. concentration of capital, misallocation of capital. It's all gross beyond recognition. Um, but it doesn't. And that's where understanding other characteristics of the global economy come in. Systemic interventions, uh, nation state policy, administrative policy, um, as well as incentive systems, as well as Fed acronyms. So, what does that all boil down to? It's the global geopolitical collusion system. It's how nation states coordinate with one another, along with media, along with incentive programs, tax incentive programs, rebates, grants that are designed to encourage behavior, um, incentivize behavior. And ultimately, what is that behavioral incentive? What does it reduce to? Because as I started this stream today, how do you look through the bullshit and really reduce everything to some sort of um, actually processable, understandable fundamentals? Suppression of volatility. All right, shit could roll over, but and the powers that be don't mind because that's a reallocation of capital. What the powers that be give a shit about is how fast capital moves. How fast capital moves creates panic. If things move slowly, money managers and investors, be it even retail, adjust. You make changes, you reallocate, you cut a loser, you reallocate to winners. But when things start moving fast, that gets the system in a state that's increasingly volatile by definition and increasingly likely to experience cascades, which trigger liquidations, during the leverage, which triggers more depreciation, and the whole shit spirals out of control. 2008 style. So the powers that be, they're in the business of suppressing volatility. Probably look at the VIX today. That should be interesting. Looks like a little blip on a 6-month chart. Let's look at the daily chart. So there's your outsized move over the weekend, and here's the daily. Looks like a big ass inverted hammer, but you're at the top, so that's more of a shooting star. Simple as that. By definition, that wick screams volatility suppression. You literally have a gap like this, and then it's just wicking down the entire day. So, 2 cents is my 2 cents is volatility has been suppressed. That doesn't mean shit goes back to the price it was. If you had Nvidia stock, it's down. You had Bitcoin, it's down 2.5%. If you had Curve, it's down 7% because people don't look through the bullshit. What does that mean? That means you need a different methodology for inspecting the markets and managing capital. Because if you're always looking at whether shit's going up or shit's going down, that's what everyone else does. And that's why everyone else buys and sells and does what they do with such uncertainty and such inconsistency and such anxiety. And it drives themselves nuts. So, entire time we've had this stream over the years has been leading us to the production of a methodology that is increasingly sustainable, increasingly rational. Hopefully, folks bought stuff cheaper under the premise of number one rule, acquire more assets. So let's say you had 50 grand worth of stuff that's worth 500 grand and it's down to 300 grand, and today's collapse is down to 200 grand. Up, down. That's cyclicality, obviously accounted for with this volatility because people are filled with anxiety. What's pertinent is higher time frame inspection. Right. In 5 years' time, if that 50 grand is worth a mil or 2 mil or 3 mil or 5 mil, gives a shit if it went to 500 to 300 to 200 to 100 back to 75. So, how do you manage capital with that long term time horizon in mind? Lendiness. What is likely to continue exist into the future? So, lendiness suggests that what continues to exist today having experienced significant volatility and pressure, liquidity crises, is more likely than less to continue to exist into the future. Time tested, battle tested, stuff like that. So that's why we define our rules of the road, our list of shit to look at to understand what is likely systemically meaningful. What businesses are established, what businesses have a moat, what businesses have momentum, what businesses have technological significance. So, in the context of this conversation right now, it's just a day of volatility. I mean, literally, the VIX is in the red. Can't make this shit up. So, this is the volatility indicator that matters. This is the volatility of money because U.S. government debt is the primary money of the universe, of the economic universe. 86.75, which is will come down this week. Today's Monday. By Wednesday, we'll see what happens by the end of the day and tomorrow and into Wednesday. But we're at minus 1.58% on the 10-year for the day. If there's another 1% tomorrow and we're at 86, I think we're finally going to get below that magical 80 mark. Um, let's zoom in. Well, let's go to the monthly. So that magical 80 mark, that's an interesting line, or at least this one right here to start. You look for data, technical data that's like, well, that's interesting. Why did it bounce? Why? I mean, this is monthly candles. That's crazy. For a coincidence, December 24 and May 24. That's crazy for such coincidence. I don't believe in coincidence. No one should believe in coincidence. So why would volatility spike when long duration treasury market volatility reached this 82? Well, volatility comes down when there's a bid, when there's a balance of supply and demand for money, US government debt. So it looks like um, actors around the world saw the increasing price of money and decided to dump into it, decided to acquire exit liquidity. And that is exactly what precipitated the entire run up. But from a monthly candle standpoint, that's a bearish engulfing. It is what it is. Very interesting. Very interesting level, 82, especially how close it is to the 100, the moving average on the monthly, the 100 SMA. So for the quite some time, in my mind, has been a level below 80, where the mechanics of global money kick in, start to do what we know that it does. So, as I've said many times, you can get this chart as inverse Ave health factor. Now, if you don't know what Ave is and you haven't used it, that's another story. But let's say you have a health factor of 1.5. Let's say 1.5. One is liquidation. You got a health factor of 1.5 and you're at 86 on the move. If you this thing collapses to 75, your health factor just went to 2.2. 60, your health factor is at 3.5. You understand? Or at least that's conceptually a decent way to look at it. Now, clearly, that is associated with collateral appreciation from an Ave mechanic standpoint. But the point is, from a global financial perspective, as the volatility in global treasuries collapses, because these things pay face value, which means a lot of banks lend based on face value and the risk thereof. So if the price is skyrocketing and the yields are collapsing, um, less likely to be sell pressure because if you sell it, you could rebuy it at a lower yield. You can make a profit, but if the yields are spiking and you sell it and then rebuy, now you're locking in a higher yield. So that is some of the mechanics involved. Generally speaking, when collateral prices increase, which is happening, starting to happen at least. We could look at the 10-year to see that. And the volatility is decreasing. That's basically the global Ave health factor increasing. Here's your collateral, your money, so to speak, and here's the volatility of it. So let's say your collateral, say it's Bitcoin, is at $100,000 and the price is going up 101, 102, 103. So when you're looking at the 10-year and move coming down, that means it's going up slow. That means it's starting to stabilize a bit. So instead of 100, 110, 105, 95, 100, 101, 102, 103, 102, 103, 105, 101, 102. So it starts to get a little sideways crab action. So when that happens with global money, that creates the situation where money turns into currency. Because if you have Bitcoin that's relatively stable, you're like, "Oh, okay, throw it on Aave." So that's exactly what we're talking about, where long duration treasury instruments get thrown in banks and people borrow against it because the volatility is low and they're not worried about liquidation or the interest rate associated with their loan is pretty decent. So the treasuries get converted into dollars via the banking system, specifically what's called the Eurodollar market, because they're printing dollars, dollar liabilities, which increases currency supply. So that's historically why the move indicator collapsing is a forward looking indicator of the global currency supply expansion. And then that's when everything gets weird. Let's take a look at move back in March. So here's your collapse in March of 2020. Here's your blow off top, and everything started freaking out. So when move starts to collapse, that's when the fun stuff happens. So if you remember back in 2020, things started popping off back in summer, March, April, May, June. Oh, it started to really get low, 49. And then September came, and then September to the end of the year, December, things rolled over back in 22. And then back in January, February in this instance, into March, things started picking up again in 21. So this is a great indicator to get a sense of where things are heading. You'll have volatile days like today, but as long as this thing's coming down, it's heading in the right direction. If you start to see shit popping off, moves starting to go up, that's when it's reasonable and it makes sense to rebalance towards the cash part of the portfolio. Nothing has started yet in these crypto markets. Nothing. And we know that from a dollar perspective because that is probably the easiest visual inspection. 10-year triple top? I don't freaking know because that was a hell of a bearish engulfing rejection of this line. What was that line? Why did I draw that line? Okay, decent line. Top back here in 1960. Uh, literally, literally, it's actually a pretty interesting line because for the time being, this 4.65% has been invalidated, and that's a move between 1966 and 2002. So breakout, failed breakout, retest. This is generally a rejection. Retest. Thus far, we're going on 2 years of a rejection of that line, accompanied by the 200 SMA above it. So that's a, a value of resistance from a MA standpoint. I prefer levels, in which case this red line is a heck of a level thus far. It literally invalidated 66 to '02. Was that 34, 36 years? Yeah, the 36 years of bond market activity. That's crazy. So, whether this thing does a dip, hits the top of the guppies into 26, 28, and breaks out higher, that's okay. That's another story. We're talking about right about now. So, from a technical standpoint, we have 2 years of interactions with this level with a retest of a breakout. and it's been holding. And now we're sitting on red with move rolling over, and the dollar looking very toppy from a candlestick standpoint. So it suggests that yields come down, at least cyclically, for a period of time. And when we're talking global macro, a period of time is what, 2 years, 3 years? I don't know, 4 years? And then maybe it breaks out 2028 and some shit. It looks like the cycle's finally starting. And that's not what folks talk about on social media. They're like, here's the bull market. There was no bull market. There was no damn bull market. This is the DXY. You go over to the weekly, there's your bull markets. It's literally color coded. Not very few people look at the guppies. I see guppies rarely on social media, but it does a great job at color coding the crypto bull market. I mean, it's literally right there. Now we had a big breakout of this level, and this level is a lovely level I mentioned yesterday on social media, or maybe this morning. This level was set back in 1976. Breakout, rejected. Breakout, rejected. Breakout, rejected. Oh, this is a hell of a shooting star with 4 days left in the month. I would love to see this close below that line. Thus far, we're actually above it, which is interesting. From a technical standpoint, that is contradictory. Maybe a little bit scary because if that line holds, whatever, because that only contributes to a daily, well, month to month inspection. So what does the structure mean? You have so much more confluence suggesting it falls down rather than it holds as support because this is designed to go up. This chart will go up. The only reason it comes down is interestingly completely aligned with the rest of the confluence. This comes down because of policy, geopolitical collusion, preservation of the rules-based order, and literally stated administration, executive policy from the executive branch. So there's great confluence suggesting, all right, we get a cycle down. How that plays out into a secular trend is another story. I suggest that it probably plays into a secular trend reversal. The dollar needs to come down meaningfully. So every time the dollar starts to break out, the powers that be will jam it down. At least for a couple cycles is the speculation in order to bring the system back to a level where there's adequate dollar supply internationally to prevent everything from blowing up. Now that they're centrally clearing treasuries with the DTCC, all right, fine. Now they have a mechanism to suppress the volatility of money. And as that volatility of money is suppressed, it facilitates the international banking system's capacity to convert that money into dollars. Hopefully that helps. I know I talk about this topic a lot, but on every time there's a lot of volatility in the market, it's so imperative to remind folks something that isn't talked about. The cycle hasn't started. There has been no bull market. And that is probably the most interesting takeaway from our conversations. Who gives a shit if assets go up or down? What matters is X, Y, and Z. How much does it cost? How much is it paying? How likely is it to continue to pay? In that regard, we look at immutable contracts. We look at lendiness. We looked at an evaluation of products and services offered from a fintech perspective, and we diversify to a degree. You make a big bet, outsized concentrated bet, one or two. I've opted for a single largest concentrated bet, and then a second smaller concentrated bet. And then the rest are distributed amongst smaller position sizes, but not excessively um, diversified. Always got to have a reasonable position size, otherwise that invalidates taking a position, or as I would better describe it, as owning something. Man, I love the weekly chart. This has got to be, aside from the DX, the 6 month, because this chart, here's your guppies. This chart tells you crypto bull markets, at least historically speaking. This literally these white lines, arrows, are your bullish parts of 2024. It's inverse dollar, because when the dollar comes down, liquidity around the world goes apeshit. But the dollar is a manifestation of U.S. Treasury markets as well as U.S. Treasury market volatility. Why the DXY is right on top of move in the 10-year to get that glimpse or glance inspection of what the hell's going on in the market. I'm able to see, boom, DXY, well, 10-year. And I'm like, oh, okay, everything makes sense. And then you get narratives like what happened over the weekend, which just caused VIX to spike, and then literally VIX to get crushed. If it's still red, if it's still red on the daily, oh my God, all crush. Powers that be have crushed the volatility because the boomer meme coin market must not go down. That's fucking shit. Boomer meme coin market, where every schmuck invests in 7 stocks and 401ks pile into the same exact shit that everyone else is piling into. What a joke. Fortunately, it doesn't take a lot of capital to extraordinarily monetize the crypto markets. A little bit of capital, not a lot at all. And when the crypto markets monetize, we get the fun zone. And the fun zone hasn't started yet. All right, let's do some commentary. Gold 70, 27.34. Okay. Part of the equation. Less than 100 on Bitcoin. Sergio, President, accounted for. If you're on X or on YouTube, please feel welcome to ask any questions. Say hi, say hello. Let's have some commentary. We'll get to all questions today, as always. Connect the dots. Let's be rational. Much a pleasure. Good ideas. Good statement. Because it seems like everyone lost their minds. Everyone. It's not just crypto markets. Pretty sure everyone has lost their minds everywhere. How often do you get to encounter or engage in a rational conversation? Maybe at university, maybe at institutions or think tanks. I don't know. I don't. It's just what am I supposed to say? I think everyone's crazy, including myself. I don't know. All right, and good morning, Blue Demon. Present. Any interest in current discounted prices? I've said a long time ago, I'm not buying shit unless there's something that screams opportunity. I'm not allocating capital. The goal of a bull market, which hasn't started yet, is to accumulate a large amount of free cash. And then, as everything's falling apart from a significantly elevated level, you have operating capital. You can't spend all your capital. So, and don't overinvest. You need to have available capital. So, I mean, maybe let's take a look. Um, Aerodrome came down nicely. I could be tempted into an aerodrome position. Where is it? Arrow. And it's structurally invalidated, meaning, but then again, you get these spikes on aerodrome, velodrome, and anything with B33 mechanics. But this level is done, so, or at least hopefully or speculatively, because if it comes down to this level, all right, that's getting interesting. So if you see a nice wick down and you're at like 25 cents, and then you can get an aftermarket VNFT for 15 cents, 10 cents, 50% off, 12.5 cents. All right, now that's a relative discount. Doesn't mean you're going to get down here into the single digit region, but this zone right here between 46, so it levels, this zone region, level region is interesting. 8 cents and 46 cents, and we're halfway between it, let's say 28 cents, and then a VNFT is 30, 40, 50% off. Okay, okay, that's a maybe. That's a maybe because the most important thing with your cash position is it's got to be really hard to spend it. After all, the whole point of everything we do is cash because that's what you use to either buy investments, buy things to own, be it stocks, crypto, cars, homes, food, cash. So a lot of folks spend cash too frivolously. It's something that folks should consciously get better at. Cash position. Yeah, Yab's in the house. Good morning. Much pleasure. Thoughts on the petrodollar, U.S.'s incentive to pump oil price? Not necessarily. Wars pump oil, U.S. wants war. Um, I don't want to talk too much politics. I'm curious as to what the administration has in mind. There's a lot of people in the administration. Everyone thinks the president runs everything. It doesn't work like that. It's a lot of social media. I mean, obviously, but the executive orders also come from the administration. It's not just everyone thinks it's one person. That's not the way it works. A lot of people with power and influence. Um, I think the incentive now is more so for oil to come down, but come down in an orderly way. GDP China's collapsing financially. That's from a data inspection, quantitative inspection. It has collapsed. Did it find bottom? I don't freaking know. So the point is, China has collapsed so far. And this takes time to work through the system. Um, we saw South Korea under significant pressure, and this is all because of the dollar. So the dollar is to a degree linked to oil prices still, albeit Luke Roman has talked in great detail about how the world has changed, what it holds in reserve, more gold, less dollars, but the dollar is still used for more and more and more transactions globally. It has gone up. It's the highest level of transaction volume in decades, dollar denominator. So composition of the world's changing. Considering all the deflation outside the U.S., the U.S. is dependent on other countries. We can't, we don't manufacture everything we consume inside the United States. Therefore, we have a significant disruption in supply chain. That's literally what sparked a chaos in 2020. We need China because if China's manufacturing goes offline, that will cause inflation to explode in the United States. We cannot collapse our allies. We cannot collapse our friends. We cannot collapse our frenemies. So my speculation is that the administration works a deal with China to decrease the value of the dollar, to stabilize the Chinese economy, which stabilizes capacity for China to meet its export and U.S. import expectations, which stabilizes prices, or maybe even deflates prices a little bit, aside from the tariffs. But I don't think, I think they understand that mechanic. You put tariffs on countries for geopolitical reasons, like they did over the weekend in Colombia, but you don't want the tariffs to hurt the population of the U.S. Prices are that whole conversation on social media is off. They're like, oh, you put a tariff on something and it's going to increase the price of some shit. Okay, that creates an arbitrage. So you're manufacturing in Bangladesh and you got 100% tariff. Now all of a sudden that factory in Bangladesh, probably should put that factory in another country or in the U.S. So basically, when you do tariffs, that over a duration of time that incentivizes domestic manufacturing. So if you tariff and drop the value of the dollar, you significantly increase the incentive to manufacture domestically in the United States. So instead of setting up a manufacturing plant outside of the U.S., you do it maybe in a free trade nation, maybe do it in Mexico. I mean, Mexico, who's talked about this? Peter Zai has talked about this. Mexico is set to be explosive over how many coming decades? I'd have to look back at his content. It's everything is going to go to Mexico, but Mexico is not going to be what it is today in the coming decades. The amount of capital for manufacturing and and employment is just extraordinary, as Peter so um, reasonably explains in his content. So I find that very interesting. Um, Petrodollar. I expect the oil price to come down marginally. I expect the dollar to come down probably marginally, just considering the amount of supply, and they want to suppress volatility. They want things to come down orderly, but a cheaper dollar makes sense. Cheaper dollar sets off the crypto bull market. You go from 107 to 100, and things are going to be freaking weird. So I have no time preference in mind. I have unlimited time preference, meaning I don't give a shit whether it's this year or 2028, where my I don't give a shit about total net worth either, where my revenue go 10x on the money. Um, what I care about only with regard to what I buy is will it continue to exist in 2028, 2032, 2036? So those are the parameters I look at. Therefore, the only remaining part of the equation is how cheap can I buy it? And if I have enough capital for an appropriate position size. But I don't. And therefore, using those considerations alone, I can invalidate doing anything. I don't have enough capital. All right, I can't buy it. It's not cheap enough. I can't buy it. So I spend my time like, all right, what do I want to own, and what is a reasonable position size? That's it. It's a relatively simple process. Rinse, repeat. Save up capital. You have more capital, more cash. Increases the potential for you to have enough capital for an appropriate position size, given a reasonable price point. Is it at a cheap enough price point? So I thought it was a reasonable price point for that liquidity position a couple of days ago. Would have been nice to have waited, but it's irrelevant. It's got 30 mil TVL already. It's pretty good. Off to a start. 33 mil. Ain't no CRV USD, but this is going to create some interesting dynamics. Average interest rate is 7 and change. That's going to affect AVE. There's going to be an arbitrage between AVE, CRV USD, Abracadabra, all the lending markets, everything should bring interest rates down across the board. Arbitrage stabilizes the whole system, especially with like, omni-chain fungible token type concepts and USDT zero. Oh dear. And money as it starts to get collateralized with incentive systems, so on and so forth. Notice how Bowl came online and there was 75 grand in rentals, which jumpstarts the mechanic. DeFi money hasn't started yet, and being a curve product, they sure as hell know how to do that. CRVUSD looks very healthy as well. We see that in the metrics. Nice revenue this week for the curve holders. Things look good. I expect revenue to be up this week, not down, which means the fallacy is total net worth as a red herring. Don't drive yourself nuts. Lows. I have VPN on, fortunately, and which I don't when I usually stream for bandwidth purposes, but Tango's insane. I mean, this thing literally has, after all that volatility, $478 million of open interest. Is that we get a better one 13 hours ago? I wish we could get it like an hour ago. And it looks like it's offline. Nope, 478. All right, so let's say it's 400 plus, considering liquidations and whatnot. I mean, this thing's pretty wild. This thing's pretty wild. 169%. Doesn't tick the boxes of lendiness. It's brand new. It doesn't tick the boxes of immutable contracts necessarily. I haven't inspected, but it surely ticks the boxes of speculatively quite interesting. Certainly from an X and Y perspective, not necessarily from a Z perspective, but that warranted exposure. That was the rationale there. Anything else? Obviously, I'm digressing from Yam's thoughts on the petrodollar, but yeah, let's go back to commentary. I'll keep up the Bitcoin chart as I talk about it. Entire West actually wants war because of pump. So yeah, but there's knock-on effects all over the place. It's not about war. It's about economic. mm, They want to suppress geopolitical conflict, and they want resources. So they use geopolitical leverage to get what they want and what they need from a resource standpoint. Um, I suspect. Well, the United States is the largest exporter of oil on the planet. Fun fact. Um, yeah, I'm not too into that thought experiments around green energy and crypto. It's too big a thought experiments. A lot of folks go down that rabbit hole, and the projections and the speculations are very far and wide. As much as I'm a very long-term planner, like green energy, all right, I see the benefits, I see the drawbacks. Um, I don't choose to engage in too much thought experimentation around the idea. I love solar power. Windmills are stupid. Geothermal's brilliant. But you have all these power plants that are businesses which employ people, which contribute to the economy and as part of the flow of capital. So they're critical. And if you disrupt that, you destabilize things and you destroy capital and you cause unemployment. So the whole question always is, how do you get from A to B? I don't know. So that's why it's not too much of a fun thought experiment. In the future, there will be more solar power. I mean, why don't we just blanket Arizona with, you know, a half $1 trillion worth of solar panels and figure out, well, put the national laboratories on semiconductor research, so we could get efficient power transmission from the world's largest solar array around the entire country. As current power lines and power transmission technology does requires distributed power generation. I believe it's the case that more power is lost in transmission than is actually delivered. That's stupid. Um, so that's what my thoughts are on stuff like that. It's like I don't know the A to B part. I understand B. I'm an engineer. I understand A. I don't know how to get from A to B. That there's so many moving parts in between. Crypto, got to be careful with as well. Which is my 2 cents is because you don't have to disrupt the banks. The banks are going to buy it because the misconception is people talk about crypto in terms of tokens and price and speculating on price and meme coins. Just folks don't understand what crypto is from a fintech perspective. So the banks buy tokens to have governance control or at least exert a degree of governance control, which means now they have a capacity to engage or at least use these businesses as part of their business. They own a part of these businesses. They could use them as a subsidiary to a degree. So that's probably so I see an A to B. I enjoy thought experiments where I understand B, I understand A, and I could see a path between A and B. So I certainly see that with crypto because I folded everything into this enterprise type of framework. These are just businesses. The banks are going to want to use these businesses. Therefore, they're going to buy these businesses. So that's cool. That's an enjoyable thought experiment to engage because I could see the whole thing. A, B, and A to B. Anywho, aside from oil, good thoughts though. More oil. Oil goes down. Bid on treasuries go down. Yeah, petrodollar. Yeah, but 10 years getting bid right now. Give it 6 months. We'll see where the 10-year and the move and the DXY are in 6 months. I suspect down across the board. I suspect the yields on 10 years to be down. Treasuries get bid. Price of money goes up around the world. Facilitates a collapse in the move indicator. Allows the banks to convert money into dollars. Dollars flood increase The currency expansion cycle ensues. Dollars flood the global financial system. Dollar supply exceeds demand, ever growing demand, but if supply exceeds demand, drives the price of the dollar relative to other currencies down. Start to see your red guppies. There you go. And that's a favorable bull market condition for the crypto space. That's what I see this year. I mean, we got the directionality. You're always looking for directionality. Look at the top on this thing. It completely invalidated everything from December of 24 thus far, which is about a month. Let's go out to the monthly because we also invalidated everything between the move in August of 22 to today, January of 25. Thus far, this move above 107.35 is invalidated. And over the next couple months, we get to see, does it hold a support or is it invalidated? And we get our cyclical roll to the downside. And is it a secular roll to the downside? Why would we think it's a secular roll to the downside looking at even the monthly chart? Because history says you get a secular roll to the downside. Here's your secular roll. Here's your cyclical, secular. And look, up, down. You see the cursor. Up, a little down, up. You see the cyclical amidst the secular. So I expect we're potentially on the verge of a secular roll. So at first, to determine that, we got to see a cyclical roll, and then lower highs and lower lows. But it's being offset by treasury demand from crypto market, which will drop yields. You get the demand from the crypto market, which collapses yields cyclically, which bids the price. As the price of treasuries go up, move indicator rolls over, spins up the global money to dollar printing machine of the Eurodollar market, and there you go, the DXY rolls over. There's your mechanic right there. By the way, would you buy liquid? I already bought liquidity. Yeah, of course, I already bought it. I took a liquidity position. I was quite fond of the after seeing the user interface, I was quite fond of the protocol mechanic. When you borrow, I don't like manual. I think managed makes most sense. You want your interest rates to prevent you from being liquidated, so you get it managed. So this is a variable interest rate product. They understand incentive systems. They understand either renting it on Balancer, Aura, Curve, Convex, probably the V33s at some point, especially for the forks of liquidity that go on to uh, the L2s and whatnot. They'll do the V33s. So this all plays into this being interesting. We'll check back in 5 years when Curve has $1 trillion liabilities and old is at 750 or whatever it is, 1.25. Who cares? All this stuff is going to explode because does it go down or does it continue to get used and used more into the future? To me, that's just obvious that all of this is going to get used more and more into the future. Colorado, stay out of the. You got to be careful in the U.S., especially with the sanctuary cities. There's no place to live. I used to live in New York, and I'm very grateful to have left New York, and I live in Florida now, where there's actually, aside from it, the stereotypical, only happens in Florida. That's stereotypical. There's a lot of crazy shit that goes on in Florida. It's not the same stuff that happens in like California and New York, and I'm not into shit like that. Um, I much prefer the policies of Florida or Texas or the Carolinas or I don't know. I don't want to talk politics too much. Denver's beautiful. The mountains are beautiful. The skiing is beautiful. Great places to visit. Very inflated prices for housing. These are all very stereotypical statements, I guess, very general. Obviously, there's counties and towns and regions and whatnot. And how could you encapsulate all the nuances in mere sentences. Denver's a hell of a state. Assume, good morning, Cap. Great day in the market. Thanks for your perspective. Always a pleasure, my friend. Thoughts on inverse finance and fixed rate lending. So fixed rate lending is interesting. I like dollar. I like the products. I like inverse finance. Fixed rate lending is also bold, liquidities product. Um, I wouldn't use it because I want my interest rates to prevent me from getting liquidated. And in that regard, soft liquidation just adds to a meaningful way to manage capital. So I still significantly favor, from a technological perspective, CRVUSD and money from DeFi.money. But this is a beautiful UI. So this will be a meaningful product. There's no one product to rule them all. These are all variations of monetary policy and downside peg protection implementations. It's called iteration. So there's going to be many successful products in this market. Not full keto, less than 50 grams a day. I watch my carbs. And because I watch my carbs, I manage my blood pressure extremely well. Um, Zero hypertension, completely in the green. Um, Lots of pressure because carbohydrates force glucose into the muscles and gets stored as glycogen with water in a 2-to-1 ratio. So I have a tendency to get bloated and swell. So excessive carbohydrate consumption, according to my physiology, I get bloated. And in the number one way you see whether you're bloated or not, take a ring on and off. So if you could take your ring on and off, and then you eat a bunch of carbs and you can't take your damn ring off, how do you fix that? Or at least how do I fix that with my physiology? Just don't eat the fucking carbs. So many carb friendly things. And guess what? The most interesting thing about carb friendly products, they tend to be very, very high in dietary fiber. Now, dietary fiber is one of the most critically missing things in pretty much all Western diets. So, 2 cents, 2 cents. Good question. Grand Rising Cap caught you while in the sun. Oh, yeah, I gotta go to sauna. It's good stuff. Oh, that'll you'll live forever going to a sauna on a daily basis. You really will. Seems there's some correlation between DeFi TVL and VE curve revenue. Yeah, not TVL, volume. VE curve TVL, as the volume goes through the roof, revenues go through the roof. Both seem 3x-ish in September. Can we expect? That's my 10 cents. I wouldn't do direct correlation, but I would say into the future, I don't give a shit about the current price. I care about the revenue. I don't care about my portfolio's value. I care about how much revenue it makes because that's what you live on. So I'm going on 2+ years of a chart of data of revenue. I made more money in 23 than I did in 22. I made more money in 24 than I made in 23. Very curious to see what the hell happens in 2025. And I don't care if 2025 goes up and then 2026 goes down a little bit, because if you have higher lows and higher highs when charting your revenue, that's exactly what you would expect, or would hope for as well. So that's my expectation: higher lows and higher highs from a revenue standpoint. Until you reach saturation, what, 10, 15, 20 years, when the market's like, all right, crypto is status quo, then we could talk about a cycle of lower lows and lower highs secularly for revenue. No stuff to talk about. Good stuff. Good stuff. Good thoughts. When you say nothing has happened in crypto, can it be specific? There has been no bull market in the crypto space, period, in 2024 or 2025. You go over to the weekly chart, the bull market in the crypto space is, as I define it, denoted by red guppies. This is where the market got gross, got weird, where everything goes parabolic to the upside and it doesn't stop for several months on end. We have had no bull market. We have had close to a bull market. We have had repricing to the upside and interesting financial activity. Meme coins don't count. That you could be in a deep bear market, and if you have a friend, and that's exactly what January of 24 was, because you're up here in with green guppies on the dollar, and you have a turn of capital. When you have a decline of the dollar into red guppy territory, it means you're in a meaningful capital expansion part of the global economy, which means it's positive, positive sum environments across the board. You have capital flowing in, capital being created, currency being created. Um, when meme coins are doing their shit, that's just a circle jerk of internal capital of people fucking themselves over with PvP. That doesn't count. What you want to inspect to understand even better is dollar flows. So you go over to DeFi Llama and you look at stables overview. Solana obviously went vertical, but that's besides the point. People are flowing capital into Solana to jerk each other off in PvP meme coins. That's fine. More important is 2.55% week over week increase in total dollar supply in the crypto space. Now the inspection here is what happens when this is 2 trill, 20 trill. And that's what matters, because then that all that capital is going through exchanges. It's going through foreign exchanges, quote unquote, the DEXs. All that capital is buying collateral. All that collateral is printing dollar liabilities, stablecoins, CDP stablecoins specifically. So all of that is what I'm here for, which is not short term. Um, there has been no bull market in the crypto space as I define it. Bull market starts when the guppies turn red, which is probably a breach of the 200 SMA on the weekly for the DXY. As I mentioned early in the stream, this is 24. Here's your two bullish periods in 24, beginning of the year with Cosmos hubs and then led into Solana circle jerk territory. So there's your two bullish periods, most bullish periods. And now, as the dollar has been topping, Solana's been hot. Got a big wad of cash flow going in. This goes down, it just gets grosser and grosser, misallocation of capital everywhere, excess dollar supply everywhere, things going absolutely parabolic, 50%, 100% daily moves on large cap crypto assets, and it just doesn't stop until the top 100 is in double digit billion territory. And the top 20 is 100 billion plus territory market caps. That's my 2 cents of where we're heading. Feels like a lot has happened in the past 6 to 12 months. Yeah, but that's not a bull market as I define it. That is the market trying to figure its shit out. You only have a bull market when the global currency supply expands, because that's when you get a wall, a tsunami of money that floods everywhere. And I roll back the tape, roll back this stream earlier when I talked about how money prints dollars, money prints currency. So you have to understand really the mechanic of how the dollar works. What is money? What is currency? It's not just the dollar, there's other currencies. So that's really what plays into my perspective on markets. And I'm looking for that tsunami of dollars to flood the global economic system, which bleeds its way into literally everything. So what are those conditions? Bam, DXY move 10-year tells us that we're heading in that direction. Finally. Hope that helps. Good question. Looking sharp, by the way, Cap. Not sure if it's the keto or the haircut, but congrats. A little keto. I'm still bald as hell. I got to shave. I think I'll shave by Wednesday. But thank you. Appreciate it. Sir, final question. Have you considered doing this show on Leviathans? I've been on Leviathan many times. I have such little time. I've been playing with some new things. I can't really show it right now, but I wanted a programmer. So I've been trying to build a consolidated money capital management page. You connect your browser wallet, and you're able to claim Kirk, claim Velodrome, claim Ramses, Nile. I don't know, claim, all from a consolidated page. I think that'd be lovely. I don't know how well I'm going to be able to achieve it, but I prefer spending my time like that and my stream. I like Leviathan. I like talking with people. I like people asking me questions. I like answering questions. I like hearing my own voice. I don't know. Shoot me. But there's such little time in the day. Do the best I can. So when I need to go travel the world and exchange my money to a different currency, that process is that is curve. Period. It's foreign exchange. When you trade from Bitcoin to Ethereum, that's a foreign exchange transaction. Not necessarily currencies, those are more assets, those are certainly property, according to varying regulatory authorities. The exchange of one asset to another is by definition a foreign exchange. So, yes, I know they have lots of products just trying to dumb it down for folks, but you also have the dollar printer. So, it's also a Eurodollar bank. There was a banking product, fintech banking product, offering foreign exchange, um, dollar liabilities, credit via, um, uh, what do they call it? Llama trade, Llama lend, and also derivative it's endless derivative products in the Curve Federation. So it's literally it hits like 4 out of the 5 uh, crypto businesses. Um, oh, I'm sorry. Actually, Curve hits 5 out of 5 because there's also liquidity financing. Oh dear, there's very few fintech and businesses in crypto that hit all 5 of the crypto business types. There's only 5 business types in crypto, and it's all the same shit over and over again, aside from primitives: foreign exchange, credit, derivatives, liquidity financing, and liability printing. That's it. There's nothing else. It's all the same shit over and over and over again. Can you explain how interest rates work from a nation to nation and how it affects certain commodities? Everything's an arbitrage. Everything's about a spread. So if gold costs X amount of dollars versus X amount of euros, can you get an arbitrage? So interest rates affect the price of currency because they affect the value of money, which is debt instruments, treasuries, long duration debt most often. So interest rates are a parameter in the pricing of money vis-a-vis arbitrage. And the spread it's really the spreads of interest rates between nation states that creates that arbitrage. And it's usually carry trade form. You're able to borrow at one interest rate and lend at another interest rate, which is literally what banks do: borrow short, lend long. But institutions do it as well. If you could borrow at 1% in Japan and lend at 5% in the US, okay, that's a no-brainer. So that's an obvious carry trade. But that happens between every nation state. That happens, so it's what is it, the factorial? So it's the carry trade goes between each and every nation state. I think that's mathematical factorial, something like that. Which votes do you choose on Curve? I'll just sort by making the most freaking money possible. So you go over here to vote market and you sort by APR. You also got to recognize weekly rewards. Uh, so there you go. OUSD, that's only $49. So it depends on how much capital you have, but $435, if like 5,000 curve, you get 30% on your money. So vote sort by vote incentive, and you get a percentage. It's an interest rate, is what it is. And then obviously you get your base VE curve fees, but most folks aren't exposed to VE curve. Most folks don't have the captain's conviction. So maybe it's a CVXCRV or a YCRV, some sort of derivative, or VLCVX, and you get in cash flow that way vis-a-vis Vodium. Um, I hope that helps. It is not easy to manage the capital, but in the end, you will see if you're making more or less money on a weekly basis, and you will continue to adjust until everyone has their own methodology on how to maximize their receipts. Hannah's in the house. How are you? Much a pleasure. I hope everything's well. Grateful for the education. I look forward to your streams. We are here. We talk about the insanity that folks call the crypto space and even more of the insanity that folks call the global financial system. And we try and put it into terms that are increasingly understandable, digestible, and navigable with The goal is really to minimize anxiety because there's really no need for it. And we minimize anxiety by understanding how things work. People have anxiety when they are fearful and don't understand how things work. Once you finally figure this shit out, it's like, oh, okay, that's why that's happening. That's why that's happening. And that's why I repeatedly tell everyone that there has been no bull market. No bull market. When you get red guppies on the DXY weekly, that's when shit starts to get weird. And we have not had weird. Simple as that. Arrow, forcing myself to be in Washington. There's nothing to do. I, I'm, we, my wife would kill me if I spend any more money. I don't even think she agreed with the liquidity position. What else do I need? What else? What else do you need exposure to? Look, we were talking about base this morning on Discord, and we talked about it here. And like, base is cool and all, Coinbase is cool and all, but it's one chain. No. So as much as I'm like always tempted, it's literally one chain. That's such a Isn't that a malinvestment unto itself when as compared to Velodrome, which is endless chains of the super chain? And as much as Arbitrum has been hurting and Ramses has been uh, uh, lagging, Ramses gave us what's the name of it? Shadow. Shadow was one heck of an airdrop. It still is, even with the depreciation. And gave us free exposure to Sonic. Oh, the best investments are the ones that keep on giving. They give free exposure, airdrops, and chain expansion. Those are the best damn investments. Yep, my man. I surely know. It's very hard. You have been the most. You have to be the most awesome parent, of course. Uh, I work too much, and my girls are not old enough to understand me. I'm fun. I tickle the crap out of my kids. They love it. I'm a fun dad, and I think as much as I'm a good dad in their youth, um, I think they'll appreciate me more as they get older. Starting to get to the point where my older one needs me for school. I'm useless with regard to like elementary education, but the second we get into like mathematics at least like a fourth, fifth grade level, I'm like, my wife looks at me like, just take care of it. I'm like, all right, cool. I I took so much math. I went to school for electrical engineering, and it was just endless math. So I might not remember jack shit from college, but the point is, I know how to do that stuff. So when my daughter needs me for that, I'm more than capable. I look forward to helping them with school and giving them the most important perspective on school. That's the biggest burden and why society is so fucked up because everyone has some wrong perspective on school. It's unfortunate. They will get a valuable real world definition of the significance of school from me. They will not waste their time, or at least I'll give them the information they need to know in order to try and not waste their time. Their path is ultimately their path. I can only guide them indirectly by vis-a-vis setting an example, as well as directly if they choose to come to me for guidance, which I sure as hell hope that's the case. Appreciate the answers, Cap. Much a pleasure. Much a pleasure. John Stabs. Good morning, Cap. I know you're a South Park fan. Did you get inspiration for your name from Captain Hindsight? That is actually intriguing. That's intriguing. Hindsight is 2020. Not Captain Hindsight. I think I started 2020 with Noah Street Bets, Wall Street Bets derivative. That was so stupid. I realized I don't know how I created the brand. It was just an idea. Some of the best brands are just spontaneous. But this is my brand, but it's also me. It's just how I talk. I drive family mad with how I talk. Endlessly rational. Endlessly. Can't help it. You know why? It's just so easy. It's kind of like way folks say it's so much easier to tell the truth. It's so much easier to be rational. Look, everyone's freaking out today with the volatility. Rationally, there's no reason to freak out, as per our entire conversation today. So endlessly rational. Pharaoh's killing it, dude. I bought like 300 bucks worth of Pharaoh because just whatever. And this was a long time ago. And that's things I like. It's a 10x already. Let's look at Pharaoh. Hmm. Oh my god. 1.62 mil. 1.62 mil of liquidity. 13 mil market cap, completely vertical. I mean, literally, if this at 13 mil market cap, this brings into context shit like Ramses and Nile and Cleopatra and even Velodrome. And now that Aerodrome's coming back to Earth, where's all this stuff in the future? 15 mil market cap is for all practical purposes a pink sheet. If you ever done equities, those are your micro mini startup pink sheets. These are the pink sheets. 300 bucks of this at $1 billion market cap, which is still like mid cap in meat space terms. I mean, $300 investment is all of a sudden worth like half a mil or a mil or something like that. I don't know. Run the numbers on that one. Criticize me afterwards. Check back in 4, 8 years. You're building a foundation of shit that you own 4, 8, 12 years. So much easier if you're 20. It's literally 12 years when you're 20, you're 32. And that means you're 10 years younger than me. I'm gonna be in my 50s. All right, great. That's fine, and that's perfect. That's the point. I just told everyone, wait 4, 8, 12 years. Buy shit now. Look back in 4, 8, 12 years. And I say that as a 40-year-old, and that means for me, it's I'm in my 50s. Great, that works for me because when I'm in my 50s and 60s and 70s, that's what I'm working for. I am preparing for then. Now, my man. Cap, thanks a lot. Great one as always. Any thoughts on FFX expansion to base? Big deal. FFX is a heck of a protocol. Uh, I don't know how for they need to get from A to B, which is more consumption. They are just big brain protocol. That's the burden of it. It's sophisticated, and we see where the market activity is on Solana and Base. It's the antithesis of the sophisticated. It's brainlet. So I don't see the path. And that's where I find my greatest comfort when I could see A, I could see B, and I could see how A gets to B. It's a derivative protocol. Purely what it is. It's an extremely sophisticated, highly successful derivative protocol, the entire Aladdin DAO ecosystem. There I always mention that Cleaver is a totalitarian owner of Convex. Nobody gets it. Nobody understands it. But when the banks start to want to control Curve ecosystem vis-a-vis Convex, and they're like, "Oh, I could just buy a fraction of Cleaver," I understand it. Being early is often indistinguishable from being wrong, but when you're rational and you know you're not wrong, it's just a matter of time. Fortunately, I have no time preference when I know I'm right. Time is irrelevant. The future will come. That's all that matters. How do you restream to stream to multiple platforms? StreamYard. StreamYard.com does the trick. 1080p requires a little bit of a subscription, but StreamYard has worked out well very nicely. Good morning, Cap. Could you please describe your position on Contango? I'm looking to take part and would like the most rational position. There's no choice options. It's either you own or don't own. If you own, it's locked for 1 year. You want to re-up your locks because that's how you maximize your cash flow. It's a permanent position. Everything and anything that I talk about, it is permanent. I have no legal authority per my documentation to liquidate basically anything unless it's like a fiduciary obligation. unless it's failed or invalidated narrative. I need significant justification to liquidate something, and I borderline need it in writing and notarization. That's just my business rules and how I've structured things. Um, so the point is, I added contango because that's kind of my sentiment. The data is insane. Simple as that. There's no complexity there. It's simple. If you have locked VE Tango, you get paid weekly. The protocol makes more money, you get paid more weekly. If the protocol makes less money, you get paid less weekly. And once you own a position, you never have to think about the price point again because total net worth means shit. So your only part of the equation is how cheap can you buy it? So in that regard, we can look at the charts. Last chart. I'm done. Noah out. Tango. I have no idea where bottom is. Does it go cheaper? I don't know. I can't answer it. But that's the only component in the calculation that matters. X, Y, Z. How much does it cost? How much is it paying? We know it's paying variable rate because it's dependent on protocol revenue. Um, Paying 170% next week based on available price point. So obviously, uh, cash flow is proportional to business revenue and inversely proportional to the price point of the asset. Because as price point of the asset goes down, you could buy more of it. As the protocol revenue goes up, you get more revenue. Okay, so it's a pretty simple equation. Proportional to protocol revenue, inversely proportional to price point, at least from a spot cash flow evaluation perspective. I think this is a lovely protocol thus far. I mean, it's paid better than many other things that I've owned or own. Um, that is no way that no way means it's going to continue to pay. But I often say if it pays now and pays today, it's going to keep paying into the future because that means it's a good product. I don't give a shit if the amount of revenue that it makes cuts in half. I care about where the revenue is going to potentially be, or I speculate it to be in 4 years from now. In which case, this is a less than $5 million market cap asset with $478 million in open interest. So it's leverage capital deployed on it. This is like a $5 million business, which could be relatively small local business, not a pizza shop, but something else, something a little bit bigger. It's a supermarket. And there's $478 million worth of financial activity going on at any given time. That's crazy. So that is called mispricing. Simple as that. It could always get cheaper. Everything always can get cheaper. The world could fall apart at any given day. So that warrants rewinding to the entire beginning of the video and how you manage just a lot of things. The whole system could fall apart. That doesn't mean that you don't own assets. The number one rule is own more assets. Number two rule is buy it as cheap as possible. Own more, cheap as possible. Those are the rules. Rinse, repeat. Hope that helps, Ryan. Comrade, hi. FAR is good. FAR is very good. I don't take cash flow from it. I have it in an ABC FAR position. Whatever is what it is. Can't do the best always. Do you have to use balancer to? Yes, it's a balancer deposit because um, the locking is done in an 80/20 LP, which uses balancer's LP system. That's the way it works. Ladies and gentlemen, we're going to wrap it up today. Let's see what the numbers are at. 107 on the dollar. Move. Look at that. Okay. Okay. Move a roll towards Wednesday. If we keep getting The bid in long duration US debt, which will roll the dollar below the 107.35 line. We should see a nice recovery in the markets if that occurs. Anyway, we'll have more to talk about later this week. It is Monday, January 27th at 1 p.m. in the afternoon. Thank you all for joining me today. 431 people made it to the end of the stream, and you are all each a little bit more rational because of it. That is awesome. Good to see nice numbers on such a bleak day. Anyway, I will see you all later this week. I wish you all a good one. Stay rational. Until then, peace.